So first resource, target market. This is an example market research sheet. Again, you guys can scan it if you want access to it right now as I go through this. You will get this at the end in a follow-up email, but I'm actually going to show you what this looks like. So I used to be on the mindset that it doesn't matter what market you're in, as long as you're consistent in your marketing and you have a strong buyer's book, you can wholesale successfully in any market, which is true, by the way. However, the amount of hurdles and obstacles that you have to go into can vary depending on the market. Like the problem you want to create for yourself can definitely vary depending on the market you start to do deals in. So I'm going to hit on some of those points and why that's what I mean by that. So when I was doing my research, this is all stuff, guys, that I found on Redfin and Realtor.com. There's great industry metrics. Just so you guys are aware, the time of this data gathering was June of 2023 when I was doing this research in order to anticipate our launch in August. And so just be aware that this data might have changed. But I was going through, just researching hot real estate markets of 2023, just trends, basic trends. And I was just seeing where there was a lot of in-state migration, because if there's a lot of in-state migration or in-county or in-city migration, if there's a high population or there's people moving there, that means there's positive activity and growth in that economy or that micro economy. So these metrics are things that I've not just created on my own. These are metrics that I got spending $20,000 for a mentorship program that I'm still active in. And so when they say these things and they're doing $1 million months, I trust their judgment on that. And I advise you guys to take this as well. So when you look at ideally what gives a market, what makes a market ripe for wholesaling, you want to look at a population of at least 500K and above. I personally like to be closer to 1 million. Why? Because I know if I capture even a fraction of 1% of that market, I can have $1 million business. I just want to grab a small piece of that market share. And so the higher the population, of course, sometimes that means it's not overly saturated, but also means I just have to capture a few deals of that market and there's enough money to go around. Okay, so I like to try to get as closer to 1 million, but if you're at above 500K, that's a good size because you need to be targeting enough opportunities or you need to be targeting enough properties. Next is median sales price. This is probably the most important metric that I undermined. When you look at this, right, and I talked about this a little bit in the Northeast, but just think about right now where we're at in the economy. There is tons of coaches, gurus. I mean, think about why we're all here. We all want to get and be successful in real estate investing. And there's a lot of people out there that have the same aspirations. And by the way, wholesaling is just one piece. You guys are aware of this. There's also all this different stuff when it comes to flipping, subject to, like there's all these different avenues that we take within real estate to make money. But with that being said, not everybody that wants to get in the game can afford a property or financing for a median home price of 400K plus, right? When I was doing deals in the Northeast and I talked about the lack of buyer activity I was having, well, when the interest rates are high and it's more expensive to get access to capital, that means the amount of people that can buy your deals or get visibility on your deals is going to shrink. And what we want as many eyes as wholesalers on our deals as possible, because one, it gives us a higher opportunity of converting, and two, it gives us competitive offers and it gives us the opportunity to get a higher assignment fee. So when you're working in markets, it doesn't have to be the Northeast. It could be California. It could be Dallas, Texas. It could be Miami. It could be, certain these major metro areas where prices are super high right now, super competitive, overly saturated, and very difficult to do deals in. Like I said, you can do deals. I have clients that do deals there, and I have people that are active there. But you are ultimately creating problems for yourself as a new wholesaler by going into these markets. Because when you acquire a deal, you're going to find it somewhat more challenging to move that deal because the amount of people that can actually afford it is less. So I like to be between that 200 to 350K in median sales price, and Indianapolis was 250, and I loved that. And then next to that was I wanted to see how much volume was happening in that market. How active are the buyers? So the more homes sold, naturally, the more people are buying. So if you look at this in some of the major metro areas, that number was staggering to me, as well as that, and at a high population. And then days on market, right? How long are properties sitting on the market? Now, obviously, it's the MLS. This isn't data for this isn't data from, PropStream or anything. This is on market activity. But if there's a lot of on market activity, that means that buyers are hungry, they're competing, and they would love to get a good deal from a wholesaler. So ideally, you want to be sub 50. This happened to be a really healthy metric at the time. I think this is closer now to like 21 or 25 or something around there. I checked the other day. Still awesome market. So when I looked at all of these metrics, I'm like, dang, like this is a really, all signs point to, Marion County. Now I will say it's a super competitive market, but it led me to Indiana. And I'm going to talk to you guys about how we started to pivot to other pockets of Indiana because we just started to connect with buyers. We'll talk about that, when we get to the buyer section. But when you guys see here, there's a couple markets we almost went back and forth on. We almost picked St. Louis. However, the population was too small. So, I mean, if you are looking in that market, I've heard really good things. It's probably best to look outside the greater St. Louis area and surrounding area to expand that population size. But I liked the median sales price. It was okay. The home sold wasn't huge. That was probably the biggest red flag to me. But it was, low median days on market. So we almost picked St. Louis. We actually almost picked Las Vegas and Kansas City, Missouri. But at the end of the day, there were certain things that just, median home price didn't do well for me. Kansas City had a low population. But I was pretty close. I think the only reason I didn't pick Kansas City was just because of the population. So this is public information, guys, that is out there. And I will say I did not know that I was going to get the positive results I got, but the data showed that there's a high possibility I would. So data drives everything, all right?